Hi everyone, welcome back to Saheb Academy. Today in this 8th video of Internal Reconstruction chapter, we're going to solve our 6th problem of this series. And the question is illustration 6 from the ICAI study material. And here the most important thing that we're going to focus on in this question is regarding provision for taxation. Okay, there are two treatments of this provision for taxation depending upon the adjustment, right? How the words are given in the question. So we're going to see both of them. Okay, how you have to tackle that. And then regarding creditors also there is a bit confusion, yeah, that I have to clear so that you will not make mistakes which often students make. All right, okay. Yeah, so let's just begin. Let's just understand the question first. Now see here, let's read the question. Illustration 6. Vaibhav Ltd gives the following ledger balances as at 31st March 2021. So here we have been provided with the information. See here, property, plant and equipment, 2 crore 50 lakhs. Okay, so here all the amounts are huge. So don't worry, it's simple. It's just, it's just more zeros. That's all. Okay, investments, market value is 19 lakhs. But the book value is 20 lakhs. Fine. Current assets 2 crore. P&L debit balance 12 lakhs. Share capital equity shares of 100 each 2 crore. Now just find out how many shares are there. It's really simple. They are saying 2 crore, right? So how many zeros does the crore has? 7 zeros, isn't it? Yes. So that's 2 crore, right? So divide that by 100. So that's equal to how much? 2 lakh shares, isn't it? Yes. 2 lakh number of equity shares are there right now. Fine. And then 6% cumulative preference shares of 100 each, 1 crore, that's the capital. How many shares? 1 crore divided by 100, that's 1 lakh preference shares, isn't it? Yes. And then we have 5% debentures of 100 each, so that's 80,000 debentures, number of debentures, isn't it? Yes. Creditors 1 crore, fine. Provision for taxation 2 lakhs. Okay. Then come to the scheme of reconstruction. See here, the following scheme of internal reconstruction is sanctioned. So in total we have 9 adjustment over here, the entire scheme of reconstruction. Yeah, 1 2 3 4 5 6 7 8 9. Yes. And then they are saying, see the requirement over here, pass the journal entries and show the balance sheet of the company after giving effect of the above. Yeah, effect to the above. Yes. Now see, understand, this question becomes a bit complicated because here they have not provided you the balance sheet. Here they have just given you information in this statement, like, yeah, they have not given you the balance sheet. So to prepare the balance sheet after the reconstruction, after passing the journal entries, you should know the format properly. Okay, so format is very important. If you know the format properly, and it's simple, it's not difficult. Okay, if you know that, then easily you can solve this question, right? So let's start. Let's go to the journal entries now, yeah, and pass one by one all the adjustments. Yeah. Now see here, we have the solution. In the books of Vaibhav Ltd, we have to pass the journal entries one by one just by looking at the adjustment. So let's start with the first one. See here, all the existing equity shares are reduced to rupees 40 each. So just by reading this sentence, you can easily understand this is a reduction in the face value. Cancel the old capital, create the new capital with the new face value, and then whatever balance comes, that will go in capital reduction account. Yeah, that's always what we do with face value reduction. Fine. So let's see. Equity shares are of how much? 2 crores. That's the equity share capital, right? And how many are the equity shares? Number of shares? 2 crore divided by 100. Yeah, 2 crore divided by 100. That's equal to 2 lakhs number of equity shares. Yes. Okay. So just cancel the old capital. 2 crore. Equity share capital account debit 100 face value. 2 crore entirely cancelled. And then credit the new capital with the new face value to equity share capital account. Credit rupees 40 into what? Rupees 40 into what? Rupees 40 into number of equity shares. The number is same only. 2 lakhs equity shares into 40, that's equal to 80 lakhs. Okay, so 2 crore minus 80 lakhs, that's equal to 1 crore 20 lakhs balancing figure. So that balancing figure, this gain will go into capital reduction account. You all know that. Simple, easy. First adjustment is over. Face value reduction in the equity shares. Now coming to the second adjustment, see here, all preference shares are reduced to rupees 60 each. So here again the same thing, there is reduction in the face value of preference shares. So let's see in the in this balance sheet like thing here, in this statement you can see preference shares are of how much? 1 crore. Yes. And how many are the number of preference shares? 1 crore divided by 100, that's equal to 1 lakh number of preference shares, isn't it? Yes. So how do we reduce the face value? The same thing. Yes, debit the old capital, 6% cumulative preference share capital account, 100 is being debited, 1 crore is completely gone, it is cancelled by debiting, and then create the new preference share capital with the new face value. New face value is 60. They said now 260 rupees each. So the new face value is rupees 60. So credit that to 6% cumulative preference share capital account, rupees 60. Number of preference shares were 1 lakh. So 1 lakh into rupees 60, that's equal to 60 lakhs. You all know. Really simple. 60 lakhs is the new capital. So what is the difference? What is the balancing figure? 1 crore minus 60 lakhs, that's equal to 40 lakhs, which will go in capital reduction as the balancing figure. Really simple and straightforward. Okay, so the second adjustment is also over. Now let's move to the third adjustment. See here, the rate of interest on debentures is increased to 6%. Okay, fine, but let's just read the whole thing and understand what else is there. Yeah, see here, the debenture holders surrender their existing debentures of rupees 100 each. Stop right there. What is the meaning of this? The debenture holders have surrendered their existing debentures. It means they have agreed to cancel their debentures. They are surrendering their debentures. They are giving their debentures to us. See, company, please cancel our debentures. And then the adjustment is saying something else also. And exchange the same for fresh new debentures of rupees 70 each for every debenture held by them. Yeah. So they are giving us debenture of 100 and taking a debenture of 70, and also the rate is also changing. Previously they had 5% debentures, 5% rate of debentures, so that they surrendered to us and we are giving them now 6%, right? 6% rate of interest of debentures. Is that clear? Yes. So how are we going to do this? It's really simple. Cancel the old debentures, 5% debentures completely, and then create the new debentures with 6% interest rate with the face value 70. Clear? So how do you cancel and create? It's really simple. Debenture is a liability. So how do you create a liability? You credit that. How do you cancel a liability? You debit that. Is that clear? That's how you do it. Fine. So see the journal entry. It's really simple. 5% debentures account, debit 80 lakhs. Okay. So old debentures are completely finished. See here. Debentures are of 80 lakhs. So that entire thing is finished. We have debited it. Now create the new debentures by crediting it with the new face value and the new interest rate as said in the question. To 6% debentures account with face value rupees 70, credit, that's 56 lakhs. How 56 lakhs? See in the question, how many are the debentures? The number of debentures? 80 divided by 100. So that's 80,000, isn't it? 80 lakhs divided by 100, that's 80,000 debentures. So 80,000 debentures into the new face value 70, new face value 70, see here, 80,000 debentures into face value 70, that's equal to 5,60,000. Sorry, 56 lakh, that's 56 lakhs. Okay, 56 lakhs. So 80 lakhs minus 56 lakhs, that's equal to 24 lakhs, which will go to capital reduction because that's gain now, isn't it? We have taken debentures of 80 lakhs from them and cancelled it, and then we gave them debentures worth 56 lakhs. So how much did we gain? We gained 24 lakhs. Yes, 80 lakhs minus 56, that's equal to 24 lakhs. Clear? Easy. And then let's move on to the next adjustment. See here. Then there are 3 adjustments. See here. Property, plant and equipment is to be written down by 20%. See, always remember, whenever in between of the question, between the scheme of reconstruction, if you get certain adjustment where the value of assets are being depreciated or they are being revalued downwards, or maybe you are writing off some of the losses, all these adjustment you have to keep on hold. You have to keep it on hold by circling them. Okay, you will do that in the big entry at last. Yeah, in that capital reduction utilization entry at last. Is that clear? So fifth also, see here, current assets are to be revalued at 90 lakhs. Just check the current assets value currently. Current assets value right now is of 2 crores. So it is being revalued downwards to 90 lakhs. Yeah, 1,10,000 reduction is there. So this also will do at last in the big entry. And then see this sixth adjustment, investments are to be brought to their market value. So just check, investments are of 20 lakhs, the book value, and the market value is 19 lakhs. So from book value it's coming to market value. So it's a reduction from 20 to 19, 1 lakh reduction. So this also will do in the big entry. Okay. But if in the between there is any appreciation of any assets, if anything is increasing, anything is gaining, then always remember you can do it directly over here. Now why do we follow this rule? It's because, you know, to save time. You can do separate entry right now also, you know, PPE to capital reduction, current assets, capital reduction to PPE, capital reduction to current assets, capital reduction to investment. You can do these entries right now only, in between only, but it will unnecessarily take your time. Yeah. So that's why just make a club compound entry at last. Fine. Okay. Okay. So let's just move on to the next adjustment, that is seventh adjustment of the creditors. So properly understand this one. This is a bit technical to understand. So let's see. It's easy. It's not difficult. It's just that I have to, you know, make you understand one thing. See here, one of the creditors of the company to whom the company owes 40 lakhs decides to forego 40% of his claim. What are they saying? They are saying there is one creditor of the company to whom we have to pay, the company have to pay 40 lakhs. And now he has decided, that creditor, that he is ready to forego 40% of his claim. So let's just calculate. How much is that? 40 lakhs. Okay, this is 40 lakhs. 40 lakhs into 40%, 0.4. So that's equal to 16 lakhs. 16 lakhs he is deciding to forego. So this is a gain to us. Is there any doubt? No. This will go to capital reduction, isn't it? Yes, 100%. This will go to capital reduction. How much? 16 lakhs. Fine. And then what about the remaining 40 lakhs we had to pay him now? 16 lakh he has foregone. So what about the remaining? Let's just read the whole adjustment. See here. The creditor is allotted with 60,000 equity shares of 40 each in full and final settlement of his claim. This full and final settlement of his claim mean they are also talking about the remaining part. So what is that remaining part? If out of 40, 16 lakh he has foregone, then what is that remaining part? Remaining part is 40 minus 16, that is equal to 24 lakhs. Yeah, the remaining 60%, 24 lakhs. So now for this, what the company is doing? The company is giving him not cash, the company is giving him equity shares. How many equity shares? The adjustment is saying 60,000 equity shares of 40 each. So let's calculate what's the value of those equity shares. 60,000 equity shares into 40, that's equal to 24 lakhs. You see, 24 lakhs we had to pay, and we are giving him 24 lakhs worth of equity shares. So in this case, in this remaining case, there is no gain or no loss. Exact amount we are paying him. Yeah, just in form of other than, you know, cash. It's in form of equity shares. Is that clear? Yes. So now let's just see this in a flow chart. Okay. In you know, the question here, in the statement here, creditors were 1 crore, right? So out of this 1 crore, the question told us there is a single person, you know, Mr. Creditor, to whom we have to pay 40 lakhs. Is that clear? Yes. And then they said, out of this 40 lakhs, 40% has been waived off. So where that will go? That will go in capital reduction. You all know, isn't it? Yes, 100%, 16 lakh has to go to capital reduction account. Fine. What about the remaining 60%? 40 lakh minus 16, that's equal to 24 lakhs. What about this? For this, the company gave 60,000 equity shares of 40 each, and that was exactly 24. 24 we had to pay, and we gave him equity shares worth of 24. So there is no, what do you say, loss or gain over here. Is that clear? That's what happened. So now let's pass the journal entry of this. Okay. And what about the remaining out of this 1 crore? We were talking about this 40 lakhs now. What about the remaining 60 lakhs? That remaining 60 lakhs still exists and will exist in the new balance sheet. Is that clear? Nothing has happened to that. That's still there as a liability only. Okay, fine. So let's pass the journal entry for this, a compound journal entry. So see here the journal entry, it's really simple. First, what you will do, it's full settlement now, everything is settled regarding this 40 lakhs. So you will debit and cancel this liability as we usually do, isn't it? Yes. So see here, sundry creditors account debit 40 lakhs. Okay, it's cancelled. Okay, you have debited the liability and cancelled it. And then we'll give him shares. to equity share capital account rupees 40, that's equal to 24 lakhs. How did we get that? You all know 60,000 equity shares at 40 each, 60,000 into 40, so that's 24 lakhs. And then while taking the amount of capital reduction, always remember you will take as a balancing figure 40 minus 24, that's equal to 16 lakhs. You will not see over here that we have written 16 lakhs and take 16 lakhs. No. Why am I saying like this? Why am I saying like this? We have already done the calculation and everything. So why can't we directly take from over here 16 lakhs and write it over here? See, understand. Sometime what can happen? Let's just take a hypothetical scenario. Okay. See, let's say everything is same. Total creditors 1 crore. Creditor 40 lakhs. They are talking about in the question. 40% has been waived off. Okay. And 100% that will go to capital reduction. The same thing. But here let's just say, for example, the question has been changed. In the 60%, let's just say the question has said that we have issued 50,000 equity shares, not 60,000, 50,000. So in that case, what happens? See, we have to pay him 24 lakhs. And the question is saying, let's just say hypothetically 50,000 equity shares have been issued. So 50,000 equity shares into 40, that's equal to 20 lakhs. We had to pay 24 lakhs and we have given equity shares of how much? Let's just say hypothetically 20 lakhs. So we have made a gain of 4 lakhs, isn't it? Isn't it? Yes. So in this scenario, how the journal entry should be? Can you directly take 16 lakhs over there to capital reduction 16 lakhs? No, of course not. It's logical. It's just common sense. What you're going to do is you're going to take center creditor the same 40 lakhs to equity share capital, not 24. You will take 20 lakhs because you know now 50,000 into 40. 20 lakhs worth of equity shares have been given, 20 lakhs, and then credit should be how much? Credit should be 20 lakhs. 40 lakhs debit, 20, 20. Isn't it? Yes. Even though here it is 16 lakhs, still you will take 20 over here. Why is that so? Because it's balancing figure. Here you have given less. Yeah. Is that clear? So that's why what you have to do, always remember these notes are all tips. Okay. Tips. Always take capital reduction amount as a balancing figure, even if the question specifies a particular amount like it did over here. 40% has been waived off, 16 lakh. It gave you a particular amount, yeah, being waived off, because in a compound entry, multiple entry, there might be other gain which you could miss to account for, okay, or other loss which you could have set off and all, right? Okay, so that's regarding this adjustment. Which adjustment is this? This is the 7th adjustment, right? The 7th adjustment of creditors. Now let's just see the 8th adjustment regarding the taxation liability. Now see here, the taxation liability is to be settled at 3 lakh. So here they are saying that the actual calculated tax liability is of 3 lakh. This is the amount that we have to pay. But if you see in the question over here in this statement, they have given us provision for taxation as 2 lakh. Beforehand in advance, we have made a provision for only 2 lakhs, but the actual liability has become more than that. So easily you can understand we have a loss of 1 lakh, isn't it? 3 lakh is the actual liability and the provision is only for 2 lakhs. So 1 lakh extra is there. So that 1 lakh extra will be a loss, you all know. And what do we do of losses in internal reconstruction? We take them to capital reduction account. Yeah, we debit the capital reduction account. So that's what we are going to do. And then understand here 2 entries you have to pass regarding this 8th adjustment of taxation liability. Here it's saying settled. Yeah, whenever the question says taxation liability is settled at so and so amount, then always remember you have to first pass the conversion entry, conversion of provision to the liability, and then the second entry should be of the payment. You will assume that payment is also done, okay? But sometime the question will say something else. We'll see that later, but first understand this, how the journal entries will be passed. Okay, see here, 5th entry over here, provision for taxation account debit. Yeah, you will utilize the provision. You have to utilize completely 2 lakhs. Yeah, provision for taxation account debit 2 lakhs. Provision has credit balance. If you are utilizing it, if you're cancelling it, then you have to debit it. Okay, so 2 lakh debit, and then liabilities of 3 lakh, so 1 lakh has to come out of capital reduction. The loss has to be borne by capital reduction. Capital reduction account debit 1 lakh. Is that clear? Yes. And then you will credit the liability for taxation. You will accept as a company that we have to pay 3 lakh tax. Okay, liability for taxation or tax payable, whatever you want, you can write. to liability for taxation account 3 lakhs. Is that clear? So this is the conversion entry. You are converting the provision to actual liability. Clear? Easy. And then, as I said, whenever the question says it is settled, then you will also assume that the payment is also done. Payment is also done. Okay, so pass the payment entry. Liability for taxation account debit to bank account. Okay, but right now in this question there is no bank. Yeah, here you can see there is no bank or cash. Here there is just current assets. So we assume that in that current asset, of course, there will be some cash. Yes, so we are crediting the current asset. Okay, two current assets, 3 lakh. Is that clear? Yes. So this is the treatment. These are the two entries you will pass whenever the question will say the taxation liability is to be settled at 3 lakh. But let's just say, for example, provision for taxation was, let's just say 2 lakh and the liability was also 2 lakh. Then there is no problem. There is no loss or anything. Yeah, it's directly, a provision for taxation to liability for taxation. Yeah, there will not be any capital reduction, and liability for taxation to current assets. Even if the liability was less than provision, then also the same thing. Provision for taxation account debit to liability for taxation, and then liability for taxation to bank. Okay, yes, simple. So this happens when the question just says settled. But if the question says the taxation liability is to be settled at 3 lakh and it is to be increased, taxation liability is to be increased accordingly, then you have to understand question is giving you a hint that the payment has not been done. You just have to increase the taxation liability. Yeah, so that means you just have to record the taxation liability of 3 lakh. So you will only pass the first entry, you will not pass the payment entry. Payment has not been done. Okay, see here, read this tip, this note. If question says taxation liability is settled, then we assume it is also paid and we pass these two entries. First, conversion of provision to liability, and then payment of that liability. Okay, but if question says taxation liability is settled and increase the liability accordingly, then we have to understand payment is not done. Payment is not done. So you will only pass the first conversion entry. That's all you will do. Okay, and not the payment entry. Okay, you have to be very clear with this. It's really simple. Okay, this is the assumption that ICAI goes with. All right. Okay, so this adjustment is also over, the taxation liability. You have understood, right? Okay, now come to the 9th adjustment. What are they saying? Okay, that's the big entry. It is decided to write off the debit balance of profit and loss account. So first, what we have to do now, we have to check how much balance is there in capital reduction account, isn't it? Yes, so let's do that. See here, the first entry, capital reduction, was credited by 1 crore 20 lakhs. So can I say it's 120 lakhs? Yes. So 120 lakhs plus, then here capital reduction was credited in the second entry by 40 lakhs. So plus 40, and then in the third entry here, capital reduction was credited by 24 lakhs. So plus 24, and then in the fourth entry, 16 lakhs credit. So that's equal to 2 crores. Yeah, 200 lakhs means 2 crores. And then what happened? Let's see the next entries. In the next entries, what happened was, if you see here, capital reduction was debited because of the loss. The provision was less than the actual liabilities, so we had to bring 1 lakh from the capital reduction, isn't it? So capital reduction was debited, so we have to subtract 200 lakhs minus 1 lakh, that's equal to 199 lakhs, or we can say properly 1 crore 99 lakhs, isn't it? Yes, 1 crore 99 lakhs. So 1 crore 99 lakhs is the balance that is there in capital reduction account. Okay, yes. And then we have 3 adjustments that are remaining. The first one is PPE is to be written down by 20%. Just check the PPE. PPE is of 2 crore 50 lakhs. So take 20% of that. That is how much we have to reduce. See, 250 lakhs, or you can say 2 crore 50 lakhs into 0.20, that's equal to 50 lakhs. Yeah, can you see? 2 crore 50 lakhs. Yeah, I've just taken it as 250. Okay, that's 2 crore 50 lakhs into 0.20, that's equal to 50 lakhs. So 50 lakhs you have to credit. Okay, to property, plant and equipment by 20%, that's 50 lakhs. and profit and loss is there. Now first we have to write off profit and loss. So see here, profit and loss is there of how much? Of 12 lakhs. So that also you have to credit and write it off. Yeah, profit and loss 12 lakhs credit. And then they said in the question, current assets are to be revalued at 90 lakhs. Now understand, current assets are impacted two times, here in the fifth adjustment as well as in the taxation liability adjustment, because we have made the payment through current assets, but that happened afterwards. First, current assets are being revalued, so first give this effect. Okay, keep that in mind while doing the calculation. See here, let me just show you. Current asset, they are saying revalued to 90 lakhs. Now see, current assets are of 2 crore in the balance sheet and it's coming to 90 lakhs. Yeah, 2 crore and it's coming to 90 lakhs. So how much reduction is happening? Reduction is of 1 crore 10 lakhs. Yeah, 1 crore 10 lakhs, 110 lakhs, isn't it? Yes. So 110 lakhs you have to credit over here. Okay, 200 lakhs, 2 crore minus 90 lakhs, that's equal to 1 crore 10 lakhs reduction in current assets. Is that clear? Yes. And then see here, investments. Yeah, investments here, investments are to be brought to their market value. That 1 lakh reduction I showed you now, 20 minus 19, that's equal to 1 lakh reduction. From 20 book value, we are coming to the market value of 19 lakh. 1 lakh reduction is there. So to investments account, 1 lakh, 20 lakh minus 19 lakhs. And then the balancing figure, whatever is left, that has to go to capital reserve as usual. So let's just see. It's really simple. 1 crore 99 lakhs was the balance, minus 12 lakhs profit and loss balance, minus PPE reduction by 50 lakhs, minus current assets reduction by 1 crore 10 lakhs, minus investment reduction by 1 lakh, and then capital. So yeah, that's all. So that's equal to 26 lakhs balance left in capital reduction. Yeah, 26 lakhs. So this 26 lakh will go in the capital reserve. Yeah, the balancing figure. Is that clear? Simple and straightforward. Now let's just understand how to prepare the balance sheet. Okay, you all know it's really simple. Let's just see the balance sheet now. Now see, this is the balance sheet we have after the reconstruction. See here, balance sheet of Vaibhav Ltd and reduced. This you have to write, okay, as at 31st March 2021, particulars, notes, amount column, equity and liabilities. Now you all know the format, right? It's really simple. Shareholder funds, under that share capital, reserves and surplus. Yeah, share capital we have equity and preference. So let's see the journal entries. Previously, yeah, leave the question, just check the journal entries over here. It's just really simple. New equity share capital we created of 80 lakhs. Yeah, 40 was the face value. And then what happened? And then we gave equity shares to creditors also of how much? Of 24 lakhs, isn't it? Here, yes, we did. So 24 plus this 80, that's equal to how much? 24 plus 80, that's equal to 1 crore 4 lakhs. Yeah, 1 crore 4 lakhs. See here, note number 1, share capital, equity share capital issued, subscribed and paid up. Equity shares of rupees 40 each, 1 crore 4 lakhs. Just write this and then divide this by 40, and then divide this by 40. You will get the what do you say, number of shares. That will be 2,60,000. Okay, just do the calculation, all the zeros, you will get it. See here, 104,000,000 divide by 40, that's equal to 2,60,000 number of shares. Okay, and then in the bracket you have to write, of the above 60,000 shares have been issued for considerations other than cash. Yes, that's what we have done. Now we have given to credit our 60,000 shares. We have not received any cash in return, right? Yes. Then come to preference share capital. In preference share capital, nothing has happened, just we have reduced the face value, just this new capital 60 lakhs, that's all. So see here, issued, subscribed and paid up. Yeah, 6% cumulative preference shares of rupees 60 each, new face value 60 lakhs you will take. 60 lakhs divided by 60, that's equal to 1 lakh number of preference shares. Yeah, no extra preference shares we have issued, the same only, isn't it? Old we cancelled and new we issued, that's all. Okay, then after that, reserves and surplus. In reserves and surplus, we only have what? We only have capital reserve, no other reserves, right? How much was the capital reserve? Capital reserve was of 26 lakhs. So just go to the notes to account, to reserves and surplus, capital reserve 26 lakhs. Clear? Simple. And then we have debentures also in this question. So of course, in non-current liabilities, we'll have long-term borrowings. Note number 3. Yeah, long-term borrowings. Previously in the question, they had given us 5% debentures, which we completely cancelled. And what do we have now? Now we have 6% debentures. We did now, we created 6% debentures with the face value 70. 56 lakh is the total amount, right? So 6% debentures, 56 lakhs. Clear? Easy. And then current liabilities. After known current liabilities, you have current liabilities. In current liabilities, we have trade payables, yeah, or sundry creditors, right? So that's how much. That's what happened to that. See here, total creditors were 1 crore, isn't it? In the question, total creditors were 1 crore. So from 1 crore, what happened? 40 lakhs is gone. It's full settlement. Remaining 60 lakhs still exists in the new balance sheet. So that's what you have to take. Remaining 60 lakhs. 1 crore minus 40, that's 60 lakhs. Clear? Easy. And then the total is 3 crore 6 lakhs. Yeah. See here, 164 plus 26 lakhs plus 56 lakhs plus 60 lakhs, that's equal to 3 crore 6 lakhs. Clear? Easy. And then come to the asset side. Non-current assets. In non-current asset, we have property, plant and equipment. Yeah, from the question you know that. So what did we do to property, plant and equipment? We have decreased it by 20%, isn't it? PP was decreased by 20%. So just check the this thing, journal entry. See, PP has been decreased by 50 lakhs. It was of 2 crores. So 2 crores minus 50, that's equal to, sorry, it was not 2 crores. So 2 crore 50 lakhs. 2 crore 50 lakhs minus 50 lakhs, that's equal to how much? That's equal to 2 crores, right? 2 crore 50 lakhs minus 50, 2 crores. Clear? Value of property, plant and equipment. Clear? Easy. And then investments. What did we do in investments? We have revalued the investment to the market value. Yes. So let's just check. Investments are brought to their market value. So that was from 20 to 19. So new value would be 19. Yes, 19 lakhs. Yeah, you can see here adjustment under the scheme of reconstruction. There is a decrease of 1 lakh. So 19 lakh is the new value of investments. Fine. And then we have current assets. In current assets, in the question they had given us how much? 2 crore. Yeah, current assets were 2 crore. Then they told us, understand properly, huh? They gave us 2 crore. Then they told us that, you know, they are revalued at 90 lakhs. Yeah, their new value is 90 lakhs. So minus 90. So that's equal to their new value would have been how much? 90 lakhs only, but the reduction was of 1 lakh 10. So remove that 1 lakh 10. The new value is 90. And then what happened? And then we have made a tax liability payment of 3 lakhs. So from this 90, you have to subtract that 3 lakhs. So that's equal to 87 lakhs. The final balance of current assets. Okay, clear? See here, current assets were 2 crore. Then you will take that revaluation into account. Okay, you will decrease 1 lakh 10,000, sorry, 1 crore 10 lakh, and then 90 lakhs is the amount after the revaluation, and then the taxation liability is paid of 3 lakhs. So that's equal to 87 lakhs in total. Yeah, the current assets, the final amount. Is that clear? So that's the current assets, 87 lakhs for 90 lakhs, the new value minus the tax liability payment. So let's just add 2 crore plus 19 lakhs plus 87 lakhs, that's equal to 3 crore 6 lakhs. Is that clear? It's tallied. Fine. So this is how you have to do it. It's really simple and straightforward. All right. If you have any doubts or anything, then please comment down below, and you know, you can also message me on Instagram. Just send a photo and ask whatever you want to ask. Right. So that's all for this video. See you in the next video. Bye.